Good morning, everyone, and welcome to the European crossover webinar. And markets are relatively quiet with the exception of crude. We've seen some crude headlines come across, regarding the possibility that, the Saudis are saying that they would cut back if Iran says that they would go in and cut back. You can see that here. Came across the Reuters headlines. Saudis had made oil output proposal to Iran ahead of the OPEC meeting in Algiers, discussing sources familiar with discussions. Saudi Arabia to reduce output if Iran agrees to freeze output at current levels of 3.6 million barrels per day. So that's what has the crude oil market rallying. The story was coming across the Reuters feed here. So that's got crude oil on the rise. We did see gold. Gold's gone and pulled off. We were discussing in the chat room yesterday. We had a nice area. Gold on a intraday short. We started to take off as bonds began to rally, and we came right into an area that I know I would have discussed it here, which was the 1347 being the 78% of the move of 920 to 5750, which also confluence with the top of the zone, which is 4080 to 4750. So we since seen the the gold market pull off exactly $10. We've kind of popped off of that area off of the 3750. The euro pulled back from that 1250 area. As we know, like I said, the euro continues to a certain extent underperform in light of you see the moves that the bonds have made after the FOMC announcement. And dollar CAD has come off a little bit in light of the crude oil move. And cable made it just above 31, but we've since come off well over 100 pips from that area. Dollar yen has come up, not a whole lot. I mean, it's come up 100 pips. I mean, I discussed that with Blake yesterday. It's like anybody that's looking for a down move at dollar yen now is getting crazy. The down move is already, it was a couple of days ago you should have been going for the down move, not when we're at the bottom. And we sense I think it's just really an oversold bounce, not really a whole lot beyond that. Matter of fact, we see JGB yields, 30-year yields, even coming down or just slightly lower. So that was, able to take a little bit of pressure off of that. Mando says, morning, Paul, TGIF, and good morning to Frederick also. So let's go and take a look, because obviously this is the news, been the news of the week as far as the FOMC. I mean, the Bank of Japan, nobody really thought they were going to do anything anyway. So the real news was the FOMC. Dollar on track to post weekly losses. The dollar index was a tad lower on Friday, leaving it on track for its worst week in a month after Fed trimmed its long-term interest rate expectations. And that was the key thing. Like I said, they didn't raise. As I said, Yellen pretty much assured, and that's probably a little bit put it better that way as opposed to guaranteed. But she pretty much assured there'll be a rate rise in December. And whether you want to bash Yellen or not, there's no way she can keep the hawks at bay. She was able to keep the hawks at bay for this month. There's no way in hell, providing some kind of as she indicated, a major risk event, there's no way in hell you're going to go and keep those hawks from raising in December. There's just no way. Like I said, she kept the tribe in check. But I'll tell you what, it's going to be a hella warpath if she doesn't succumb to raising rates in December. There's just no way around it. Like I said, providing as long as we don't encounter, she says, a big risk event. That means so. But what the market's focusing in was the downcast going further out, which I think is probably within reason. Not that I'm thinking that she shouldn't raise rates, but we have so many issues around the globe. That's gonna keep a leash on U.S. growth to a certain extent, as the rest of the globe is just in bad shape. So, says in Europe, the focus was on preliminary Eurozone Purchasing Managers Index releases for September. Business activity is expected to continue expanding, although at a slower pace. German private sector slowed to a 16-month low, and traders said that unless the data surprises considerably, there will be limited impact on policy expectations on the single currency. Now, one of the things that the Bundesbank warned about, as I mentioned, announced 3 days ago, is that they expect a slowdown in Q3 for the German economy, which doesn't augur well for the Eurozone economy. It says the dollar index was down a bit while the euro was up 0.1. The Fed lowered its medium-term rate guidance path while keeping a rate hike in play at the end of this year, has left the dollar very finely balanced, says Yoshiro Goto, currency strategist at Nomura. Federal Reserve projected a less aggressive rise in rates next year and in 2018, and cut its longer rate interest rate forecast to 2.9 from 3%. Also Wednesday, the BOJ shifted its targeted interest rates on Japanese government bonds as the focus of its massive monetary easing program, dropping its explicit target of increasing the base money. And like I said, you already saw what happened. Like I said, nobody believes them anymore. And I've been saying that. Like I said that. Now it's going to be close to 2 weeks. I've been saying this trade is dead. It's over. Finito. Turn out the lights. The party's over. And that has come into full fruition. The build-up Wednesday was large with lots of anticipation, but everyone kind of walked away scratching their heads, says Burke Wakabashi, head of Hong Kong of FX sales at State Street Global Markets. We're defaulting to the levels where the market is comfortable. There wasn't enough to energize the dollar through 100 yen or 103. You know what? That's exactly what I told Blake yesterday. I just, my point was I didn't say, I wasn't advocating, hey, buy the dollar yen here. But like I said, you're smoking crack if you think now the dollar yen's going to fall apart. Okay, now it's all clear sailing. The dollar yen's going to 95. You're a freaking idiot if you're trying to short the dollar yen yesterday. And I said that. Said that in the morning, and where are we? 100 pips higher. Like I said, I haven't fooled around with this stupid pair. But I mean, you're pretty freaking ignorant if you're trying to short the dollar yen yesterday morning. Okay, now's the time to short the dollar yen. Man, how stupid are you? I mean, the time was not till yesterday morning. That's what I'm saying. Well, I expect it to stabilize here. I mean, now it's 100 pips off of those lows from yesterday morning. But I mean, yesterday morning was not the time to go on and short the dollar yen. So it says the dollar's proximity to the 100 yen did not escape the attention of Japanese authorities who do not want the yen to rise sharply. We're concerned about recent, extremely nervous moves in the currency market, Chief Cabinet Secretary Yoshida Suga told a regular news conference on Friday when asked about the yen's rise. Who really cares what they say anymore? Nobody cares. Frederick says, do you think it's going to 95 yen now? I don't care. I don't care. It doesn't matter. Like I said, I told you 2 weeks ago, the trade is dead. I don't have no freaking crystal ball. I don't know what it's going to do now. My guess is it would rally a little bit. And if the stock market, which has not been, that was another point I was arguing yesterday. With the stock market still advancing higher, how do you expect the yen to go on and fall apart? Well, the yen itself to go on and strengthen. It's just not under this environment. Felix says Goldman Sachs is 108 by year end, so you can you can be right. You know, because you're saying that it's go to 95. You have to look at what the what the S&Ps are doing. If the S&Ps start running out of gas and start sliding big time, then you can see the yen start to strengthen. I mean, it's just, this is being predicated on, you know, I mean, the thing is, I told people yesterday, you have to let the market kind of soak in what has happened over the last couple of days. Because, you know, we had some moves after Labor Day, but then they weren't very big moves. So the market was really waiting to really give us some sense of direction over the course of, let's say, the next 2 months after the FOMC. And we got that. The Bank of Japan, like I said, you can throw them to the side. They're nobody. I already told you that I would have to say they are probably officially the first central bank to completely, totally, and you know, I can't say it enough, is, you know, thoroughly lose credibility. And when I say that, is to the extent that, like I told you, they were trying to, you know, do what they could with the you know, announcement, you know, a couple of days ago. Not only did anyone, it's strike one, strike two, strike three. Not only did anyone not believe them, strike one. Not only did people take the other side of the trade immediately, strike two, but they profited immediately on taking the other side of the trade, strike three. So like I said, the Bank of Japan has no credibility whatsoever. None. I mean, I think they're trying to do what they can. They've got a lot of issues with demographics, with, you know, aging population, chronic savers. But the thing that killed this trade was the in-house fighting, I told you. And I laid it as simple as I could. It was at 4:32 on NFP day, and by next week, within a couple of days, it was 300 pips lower. You don't take 300 pips away from either large institution banks, small traders, funds, or whatever, and get the market to come back in. Like, okay, we're ready. Okay, let's buy dollar yen, or let's sell yen. People are not stupid. And I'm sure people were pissed off. I mean, like I told you before, I only lost a little bit, and I was pissed off because, like I said, I bought the dollar yen 200 pips lower. I thought I was smart as a champ. And I was only trying to grab 20 pips on a quick trade, and I got all of 17, and then the market just starts coming right back down. And it starts little by little. And then by in the Asian session, I was already, you know, I got stopped out, but I'm saying is it turned around and drops another 50 pips lower. I mean, nobody's going to, I told that all going into the BOJ meeting. I told you nobody believes them anymore. The trade's over. I mean, so it was just, like I said, you just sell rallies. That's all you do. At this point, you just sell rallies. You pick your spots. So look at the cable. Cable rallied, but it's already slid back down the pole. Sterling slid back towards 130 on Friday, ending the week in much the same place as it started, with worries over Britain's exit from the European Union. Pound jumped back over 131 on Thursday after BOE's policy. Kristen Forbes said she saw a case for a further cut in interest rates after the bank slashed them to a record low. Well, just because everything's come back, it doesn't mean that they're going to go and turn around and go back the other direction and say, okay, now let's start raising them. Since I'm saying that was somewhat crazy if people actually thought that, you know, that's what they're going to go on and flip the other direction. That wouldn't even make any sense for them to do something like that. So be just a moment. Yeah, but just a second, just updating something real quick. So let's go on and move into the charts. We'll take a look at this also, see what's coming up on today's data. See. You have the flash PMIs, which France flash PMI, major shock. It's actually got a little bit better. Germany's a little bit better. Eurozone PMI a little bit better. We do have Canadian CPI today and Canadian retail sales. We do have manufacturing PMI today. And in the U.S., and that's going to be out at 9:45 Eastern. So we're going to switch over. It'll be just a moment. And we're seeing crude continue to rally. On this news that we had received, we are coming into a key area. Obviously, that's weighing here on the dollar CAD. You can see that right here. Let's go on and take a look real quick at crude. I was looking for it to come to this level. Yesterday, we talked in the chat room about an area where there could be of interest to short. Now, that was yesterday, not today. I mean, obviously, we just got the big headline. But it was actually, was this 46.92. Now, the only thing this may mean then is that the market may pause a bit from that level. But obviously with the headline, and Anders made a good point in the chat room. He was like, I'm sure nobody wants to go short crude over the weekend. And that's the way you have to look at it. Is it coming into a Friday? Because the market was already selling off. So they probably thought, oh, okay, everything looks good. We're selling up. Now, that being said, we were in a buy mode on the 2-hour. And you can see that they came down here to support in here. And then they still look pretty bad, overall. But then we got that headline. We do have a level here at 45.60, which the market never even made it there. You can see here we had a bit of a shooting star here, actually two back-to-back shooting stars, then a long-legged doji, and then the market started to work lower. But like I said, if you're looking for an area where the market may start to run out of gas, it would probably be, to take a respite, probably between the 75 and 92, which is the area that we were looking at yesterday, and I thought 92 would be a good area, see if things squeeze up higher. Obviously, they ran out of gas here, and then we just started working lower. But I mean, it's coming to a weekend. We got the headline news. Then also there may be some traders that come in, to New York, and they're thinking, oh, whoa, what the heck happened here? But you'll probably see the market take a bit of a respite towards this 46.92. We're going in. You see here let's go and pulls back out a bit. You can see that you have some nice touches and volume in here. You see this whole, and as I'm saying, if they want to pause here, I thought that 46.92 was going to be good yesterday. We could get that stretch there. But you've got some good volume here between 46.92 to 47.12. You see this whole zone here? You see it right here? So 46.92, 47.12, if they want to stretch it. Yesterday I thought it was going to be a good area to take the other side if we got to 46.92, because then you also had the 46.75 being the 78% of this area of 43.06 on up to 47.55. But now, like I said, with the headline, all I would expect now, I wouldn't be one to take the other side in light of the headline, but you could expect the pause probably about around this 46.92 if they can stretch them a bit, and then the market may pull back to regather itself. Let's go and take a look here on the euro dollar. Now, working a little bit hard, we made it up to this 1217, and we did get some positive purchasing managers index out of Europe, which kind of probably helped the market from getting much lower beyond that. If we were to take a look at it on the 15-minute chart, there was some good support there at 1193. We have 1189 on the 2-hour chart, but you can see here now, in order for us to neutralize this downside action, as I mentioned before earlier, we would need a 2-hour close above 1122, and that's 1122 right there. So in order to neutralize the downside action, we would need a 2-hour close above 1122. I mean 1222. We can take a look at it on a 15-minute basis here to see where we saw that support here. I still think overall the euro worked lower, but like I said, you have to, in light of everything that happened in the post FOMC, you have to let these markets have their run for a little bit. So see what we're. Walter says, good morning, what's up? So let's go on and take a look at it on the 15-minute chart. So here's where they would find support at, which is this 1193. You can see here we had some nice touches in here going across. And I had this 1193, and they made a move down there much earlier, actually in the Asian session when they were lower. And on the way back, we held in here. Now, we got the purchasing managers index, which kind of stopped the market, quelled the bit of a downside action, and we're trying to work hard. But we would have to get, as I mentioned before, a 2-hour close above 1222 to negate the downside. Now, we're still in a sell mode. And these are the 30-minute EMAs that I just have superimposed or overlaid, however you want to call it, on the 30-minute. On the 15-minute, have them overlaid on the 15-minute, but it's they're just adjusted. But they're the same 30-minute EMAs I've been using for a long time. So they're still in a sell mode, but they're certainly coming close to almost generating a buy signal. Now, we've gotten into a sell mode here. You can see really towards the low, almost at the bottom here, because they've been in a buy signal hold, and then the market was able to push a little bit lower. But we held them here on this favorable PMIs. But the market, ever since that morning, had been on a, actually FOMC morning, late FOMC morning, had been on a buy mode as we crossed over. Obviously, we tested them lower here. And the market came back, and then from there we started advancing. Now we've pulled back, and it's certainly not the type of action you would expect if you took a look at the bond market, or even to a lesser extent, I mean the gold market. You know what I mean? So euro has continued to, I mean it's certainly higher, but it's it's probably not as high as most would think that it would be. But like as I said, they'll need a 2-hour close above 1222 to go on and negate this downside action. So let's go and move back into the 2-hour charts. It's actually already time for a break. Yeah, Peter says got no sound. He's got to go and reboot because there's nobody else having any issues. Hang on. Just go and move this back here. And we'll go back into our charts. It's already time for a break, so let me go on. That's for Peter, who said he had doesn't have sound, but nobody else is reporting any audio issues. And also, I listen on a different device. That way, if the screen gets stuck or there's no audio, then I know that something's going on or something's up. At that point. So let's go and grab our break. And IB says no problem. And Peter says okay, so he's going to try and exit or reboot. And let's go on and take our break. I'll put on the headlines and grab about a usual standard 10-minute break. And when we get back, we'll take a look at the other markets. Okay, and we see, as I mentioned, the euro is trying to hold its own here and work hard, but we need a 2-hour close above 1222 to negate this downside action that we've had. So we need a 2-hour close above 1222 to negate that downside action. Take a look at here at the gold market, and that came right into the 47 area. You don't see it right here, but we'll go on and move into the 15-minute chart, get an idea of where we are with gold and what kind of a rebound we might see. So let's just go and move into that 15-minute chart, see what we're referring to. And that's what we were referencing yesterday. We actually saw a decent pullback from this area here, and we got short. And the market was already starting to run out of gas. And what happened was the bonds started reasserting themselves and taking off. And that caused the stops. Actually, should have even covered right in here, because I could already see the bonds moving higher. And it sparked some short covering. I was looking at the areas to protect profit. We're going to be at, I think it was 42.50, I think, and then 43.80. Anyway, so we've got blowing and going to the upside. And I was telling people, you know, what they're looking for probably is going to be this 47, because 47 is a 78% of the move from 920 to 57.50. Right in here. So that's 78% of this move here. It's 920 to 57.50. And that also was confluencing with this zone that we have here. I don't know how much further back we can go here. We can, but you see all the touches here at 47.50? See this whole area. See this zone here, the top of the zone? A lot of touches above here. You know, coming into this and then pulling back, either using it as support, or eventually as we break lower, then it becomes resistance, and then it moves back towards $47. As we go further back up, you'll see it here. We come up here, and then 47 is used for support. Support again, but once it breaks, everything comes apart, And so 47.50 was confluencing with the 47, which is a 78%. And that's where we saw the market run to. And then we had a very nice $10 pullback in Asia. And now we're trying to work a little bit higher so we can kind of get an idea of like where we possibly going to go and move to. You take a quick fib. Probably moves over here, which is going to be 44. It's actually 43.90, which is a 61% of this move. We can go in and mark this off here. And that's going to be confluence here with this 44.20. I'm not going to mark this off. It should be a little bit more pronounced. And you can see here. You can see how significant the 44.20. We had that marked off from before already. If we were to look back here, you can see this 44.20. As it got above it, they came back for support here and then launched. Okay. But as we broke lower, that 44.20 capped any upside moves. So you can see the significance of the 44.20. So moves into the 44.20, which is actually an issue where the market ran out of gas. You can see here before we started pulling back. So if you see this 43.90 is confluencing here with the 44.20, then any moves up here, then you would look for probably longs to go on and start to exit. You could go on a way to get it on a very short-term basis if there's any short setups. The problem is right now is we're back on a buy mode. Right now we're in a buy mode. And we're going into the weekend. We've had it's going to be a very nice weekly close on the gold market. We can take a look at it. So, but that'd be a good area for longs. Anyone that got long here to go on and look to exit in here. So we'll take a look at where we stand here on cable. And we actually, the market actually came up short of this 38%. I thought they'd probably make it up to the 38% before they ran out of gas. I thought they'd probably make it up right in here into this area here is where I thought they would come up to. As you had the 31.36 being the 38% of the move here, 29.45 to 34.45, and that would be confluence in here with this 31.52. So I thought maybe if we didn't make it all the way up there, I thought they would probably make at least a closer stab. You can see right here, if we look here, right there was a 31.38. So yeah, I would have thought that they would at least, I mean, they didn't come that far away from the 22, but I thought they would have tried to make a good stab at it. But obviously they encountered some pretty good selling at that price. Thought they might be able to juice them up just a little bit. And here we are working lower. And it's going to be a rather pitiful weekly close if things continue to go and stack up. That actually might be helping out the euro. You know, when you look at it versus the euro versus the pound, might be holding up the euro a tad bit here. And I'll go back into the euro because you would have thought that the euro would have been doing a little bit better in light of, you know, the FOMC decision, which is, if you saw my blog post, which I think overall, I think the euro will be going lower. By December, I expect it to be a whole heck of a lot lower. But, you know, with the cable being so weak and, you know, the issues with the FOMC, you would expect the euro really probably to at least be at 12.38 at least. And it's really struggling here. And I already showed you on the 2-hour chart that we're going to need a 2-hour close above 12.22 to negate this downside action. Now, we do have a little bit of a buy signal here. If we were to roll over, it really would be very, very bearish. Actually, if we were to roll over, that's one of my real favorite signals would be is if where a market flips to the buy signal after being on the sell side, and then were to flip back to the sell signal, then you would see a pretty good down move. And that down move will probably take us down in here into this area, 56 to 66, maybe all the way down to this 1152. Because what would happen is anybody that bought against this and saw the momentum then would be underwater. I'm saying if we fall back in here, and then anybody that's shorter would say, man, I got to get on the short side. So the momentum that would push lower would be very, very strong. And we probably wouldn't slow it down until we got to about 1150 down here. But they are struggling to stay here. And like I said, we need a 2-hour close above 1222 to negate the downside action. And we're really having a tough time, and it shouldn't have that tough a time if you look at where cable is, because in that, you know, the effects that I have on the euro pound, that should go on and be giving the euro a little bit of an extra boost. And instead, the euro is really having a tough time trying to get past this 1214. And once again, we go back into the cable. And you would think that the euro would be doing a whole heck of a lot better in light of how weak the cable is. I think the euro would be closer towards the end of the 1230s. And here's cable weakening, so that's got to be weighing on euro pound. Well, the euro pound is still going, and you would think, like I said, that that would create a whole lot more upside for the euro here, because the cable's so weak. But it's not translating to strength in the euro versus the dollar. I mean, it's holding its better own here. Now, we are coming to a very key area here, and it, you know, continues to go in advance, which is right here at the top of the zone here, 86.51. This is what we talked about the last time, if y'all remember correctly, and we're talking about this being a very good entry level between 30 to 51, because you know there's only 21 pip zone, and Amanda got short, and I don't know if she ever stayed so short, but she was doing really well. She basically top ticked it. So we're here at the 78%, and 86.51 is the top of the zone. You know, going into the weekend, they might be able to squeeze a little bit more, but so maybe this is right there, 86.74. We'll go and mark that off. There. Because you can see where the market came back here, held it, rallied, came back to 74, held it, came back to 74, held it. When we broke it, when we tried to rally back up, that capped the market. They tried back again, they capped the market, they got above it. So this 86.74 is pretty key. Once again, it's pretty hard to go in and fight this, you know, going into a weekend. not to mention, here's that signal I was talking about. You see, so we've been on the buy mode here, and notice how the two EMAs kissed each other, but it still remained in the buy mode. So it's in the buy mode, everything looks good, and we go, finally we break low and we go into a sell, and now we flip back into the buy. It's just exactly what I just showed you here. And you can see how powerful that is when you do that. You've been in a buy mode, look at that, you've been in a buy mode for 2 weeks. Stayed in the buy mode, never crossed over. We finally crossed over and people saying, wow, fantastic. Now's the time to get short euro pound. And we flip back the other way. So anybody that got shorted here, they'll all into the hole. And then as the market breaks higher, people go, whoa, this is looks like it's a buy signal. And you can see how strong the momentum takes you. Well, take a look right now. You can already see the crude starting to fade back in here. Notice how they just took out those highs by just a hair. See right here, here's the highs from yesterday, and they just took them out by a few pennies. Once again, I thought they'd still make a move up in here towards 75 to 92, and then exhaust itself, and then come for a pullback. But it's already starting to fade. So let's go and take a look at the dollar CAD, which has gone, we had a nice rebound. Actually, I thought we'd go in and pull back a little bit further as the dollar, at least in the morning, was under some pretty good pressure. We'll pull back down to this 29.50 to 29.40 area here. But we did hold the 130 area. I would have at least expected just to gun some stops below 130. We saw a nice rebound as crude weakened, but obviously as crude began to rally off of those headlines this morning, then we saw the dollar CAD come off. But it still remains weaker despite crude coming off, and that's, I think, now here we are at the euro coming up to this 12.22. Now I think this more or less, I wouldn't say more or less is, but is more of a byproduct of what you're seeing here with the euro pound. Blake should be coming on any moment. Hang on.